Hello, this is Matt on the Moon Lambo channel. The drop that we're experiencing right now, it was expected, certainly according to one very popular analyst who I follow, and I want to share with you what he has to say because it's actually a really rosy story, and if you're perhaps a little bit down because markets are also down, and I know how it is, this is probably going to make you feel a little bit better. And I'll tell you in a general sense, the analysts that I follow, I think honestly at this point, off the top of my head, I think pretty much all of them agree that either this is the tail end of the bear market, so then that can mean a number of things, whether it goes on for weeks or months, it's the tail end of the bear market, or it could already, the bottom could already be, we're actually, maybe this is the part where we're actually about to move up. This is the accumulation phase, which by the way, as far as I'm concerned, is where the most opportunity is. Because like buying crypto when everybody's in a state of euphoria, no, you need to be there paying attention like you are paying attention right now to crypto. Obviously, if you listen to this channel, you're paying attention to crypto in general, I'm willing to bet, right? And kudos to you, because that's when most people aren't paying attention. This is the time to prepare for what will come in the future. And it's just, some people just do not get it. But I'm willing to bet if you're here and just following crypto in general, you probably do. So maybe I'm preaching to the choir a bit. But it looks like either, again, we're at the tail end of the bear market from what these analysts are saying, or the accumulation cycle, like it's already begun. We're already in the next cycle, and we're just, in a general sense, going to be moving up. I'm going to explain why. And also, I got to share with you some really interesting facts about what's been happening with stocks. Just some, well, specifically an index fund, the S&P 500. I was talking about it recently the other day. I just have a couple things just to add and share with you on that point, just data that will help you grasp exactly why it's crucial to stay the course when investing. It's not a suggestion, it's a requirement to be successful investing in the stock market and or crypto. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun, damn it. And if you don't like it, well, you can just get out. Okay, I'm going to drink some water there. That one, don't know why that happened. Definitely keeping that in. Mostly because I don't edit videos, I do everything in one take. So that's the real reason. But even if I edited, I'd probably just keep that in. Because it's the Moon Lambo channel, damn it, and I do what I want. So I record this. XRP's at 31 cents, Bitcoin's at $19,651, market cap for the asset class $891 billion, and Bitcoin dominance just a hair over 42%. So a little bit down. I mean, you can see, so for example, Bitcoin down last 24 hours, about 4.5%, XRP down 4.15%. The market's red. The market's red, but as you'll see in a moment, a couple minutes, I'll get to it. One analyst he literally called this, and so he thinks that this is a point where we'll be bottoming out very soon, but wait till you see his upside target. We'll see if it comes to pass. He's got quite a following for a reason. I consider him a top shelf analyst. Here's a crypto fear and greed index at 16 out of 100, indicating the market, of course, still in extreme fear. Just the other day, it was at 24. Remember that? And just yesterday, literally, it was at 22 out of 100. How quickly things change, right? Oh, to be an emotional living. Not me, good sir or madam. So here's the S&P 500 index, and this is on CNBC. And I just want to point out, the S&P 500 is down year to date 19.13%. You can see this here, right where I'm circling. 19.13%. Now, if this were a crypto chart and a crypto statistic, you'd be like, oh, so what is it, like a Tuesday afternoon, down 19%? Okay, no big deal. But this is the S&P 500. So even though it happened over a span of just over half a year, that's bonkers and insane for the S&P 500. Like that's a big move. It's not unprecedented, don't get me wrong. That's a big move. And so the fact that we've seen Bitcoin and XRP and picker crypto go down in tandem as this happened, this shouldn't be surprising in the least. And this is why I wanted to just hammer home this idea. And I'm going to show you some stats right now. Hammer home the idea. It is crucial to stay the course when investing. When prices go down, you can sell. I'm not telling you specifically. I don't know your circumstances. This isn't specific financial advice for any individual person. This is just what I believe in a general sense. Like, when prices go down, it's stupid AF to be feeling emotions and then panicking and then making important financial decisions as a result of those emotions, which are not based on data. Let me show you some real numbers. So there is this from Business Insider, and they titled this piece, the average stock market return over the past 10 years. And it's a newer article. It's from May 26th this year. And check this out. This is amazing. So this is worth knowing. They wrote the S&P 500's average annual returns over the past decade have come in at around 14.7%, beating the long-term historic average of 10.7% since the benchmark index was introduced 65 years ago. So worth noting, the S&P 500, technically it's only been around since 1957, but the S&P was actually around since the 1920s. It's just that it was tracking fewer firms back then. It may have been, off the top of my head, I think 90 firms. So it existed from there. But even if you take a look at the performance of the S&P dating back to the 1920s through today, the returns on average are still over 10%. So fine, we're talking about since 1957 because that's when it was officially the S&P 500, 10.7%. And bear with me because this is all important. You'll see why. Piece continues. But the stock market return you'll see today could be very different from the average stock market return over the past 10 years. There are a few reasons why you could see a bigger or smaller return than the average during any given year. There are many stock market indexes, including the S&P 500. This index includes 500 of the largest United States companies, and some investors use its performance as a measure of how well the market is doing. Here's how the yearly annual returns from the S&P 500 have looked over the past 10 years. And so this is interesting. If you want to pause, feel free to take a look at this. I'll keep it on the screen for a moment, but what it's showing, again, it's showing the S&P 500 returns over the span of a decade, from 2012 through 2021. So you can see in 2012, you're up 16, next year up 32.4%, but there were some not so hot years. For instance, 2015 up only 1.4%. Well, I didn't check what the inflation rate was that year, but usually it's 2 or 3%, which means adjusted for inflation, your net worth went down. Even though technically it's up 1.4%, if you adjust for inflation, you're actually still down a hair. Does that mean that you should panic sell because you're technically adjusted for inflation down? I don't think so. I sure as hell don't, because you know what you would have missed out on? The next year was up 12%. The year after that, 21.8%. But then 2018, that was kind of scary. The S&P 500 in 2018 was negative 4.4%. But see, that's what I'm saying. Net worth is actually down. And so you feel that over a span of however many weeks, months, or for most of a year. People that don't know what the hell they're doing from a financial, there's financial illiterates, unfortunately. You just need to arm yourself with knowledge. They panic sell. This is just what happens. And you know people sold there. It was down 4. What pushed it down? The people selling it, right? And then more people sold because other people were selling. Down 4.4%. You know what it was up the next year? The S&P 500? It was up 31.5%. So you would have missed out on the 31.5%. And again, so a couple things here. Crypto, in a general sense, not down to the day, the second, the week, the month, so on and so forth, or the quarter, whatever, crypto does follow what's happening with stocks. It just does. There's no shortage of data on it. I've displayed it on the channel for over a span of years. It's undeniably true, right? And that's why I was making, and I don't want to rehash a recent video that I put, it was like 32, 33 minutes long, but I was even playing with like a compound interest calculator just to kind of get you an idea of like, this is why it's so important right now while the market's down to be prepared for what's to come, because markets don't stay depressed forever. So even if we haven't seen the bottom, say there's another scary leg down further, I'm not going to emotionally respond, but here's why it's important. Like if you buying now versus closer to the peak of this newer market cycle, whether we're in it now or we're about to enter it, buying now versus then is the difference between maybe making a little bit of money or even getting wrecked if you're too late versus accumulating life-changing wealth. And I'm telling you, in crypto, it is not difficult historically. And this will be bonkers to anybody that's not in the space, but you've been in the space for a while, you'll know this is true. It's not hard to put in a bit of money, a little bit, whatever that is to you, and then suddenly you have $500,000 in crypto. Now, of course, if you don't cash out because crypto is volatile, nothing goes up in a straight line forever, you could quickly lose that. And I told a very brief story in a recent video where there's this guy where he was just being honest after the 2018 collapse of crypto after the bubble popped. He's like, yeah, at the peak I had over $600,000, and then you think he got away with like $100,000 or something like that. He just didn't sell. And that's why I just kind of wanted to point out, and this is part of the overarching point, and I don't want to beat a dead horse since I spent a lot of time fleshing out my ideas on this. But if you just had like $500,000 And and what's on your screen right now is just a compound interest calculator. So if you invest $500,000, like say you get those crypto earnings, and you think, well, $500,000, that's not sufficiently life-changing. Depends on what you're looking for. Because if you're willing to not touch it for 20 years and you invest it in an index fund and it has the same historic returns as the S&P 500 at 10.7%, that $500,000 after 20 years is worth $3.8 million. And so even if you factor in for what a normal inflation rate would be, at whether it's 2 or 3% historically, I know it's much higher now, but it'll go back down, I think. But even if you account for inflation, well, holy hell, even adjusting for inflation, your net worth is way, way, way up. That is life-changing right there. And so that's why I'm saying, like, right now, that's why I'm so glad, excuse me, I'm so glad you're paying attention, because even though I can't tell you what's right for you specifically, and I would never assume to, I'm just a regular dude on the internet. There is nothing special about me, but that's the point. Like, that's empowering. The everyday person can make life-changing wealth. I'm not some sort of internet guru. I'm tired of the YouTubers out there who they'll go unnamed. I'm tired of the YouTubers out there who are fake internet gurus. And I'm not talking about the XRP community, but just in a general sense, some of these fly-by-night crypto YouTubers, they're out there when markets are going buck wild, and then they're nowhere to be seen typically when the bear market hits. They're just fake internet gurus, and they're selling you these BS courses. Well, I don't have a course to sell you. All you need to do is just, do some research and implement common sense and just be patient and unemotional. That's pretty much it. You don't need to be a wizard. You don't need to buy a damn course. Just be diligent. Be an adult. Don't impulse buy stuff. Well, at least not big stuff. Maybe a Snickers bar in the checkout aisle. Okay, fine. We'll let that one pass. But when it's big stuff, no. When it's big, important financial decisions, because again, it's on your screen right here. You can play around with this. And if you don't believe the actual factual data of 10.7%, well, you're wrong. Like, that is the average return. But even if you don't think that's realistic moving forward, fine. Put it at 10% even, or 9% or 8%. You're still way up. And so that's why I'm saying, like, right now, positioning right now, accumulate, and you could get up with way more than $500,000. That's what I'm saying. That's what's exciting about this, though. Like, it's not uncommon for people to end up with literally 7 figures in crypto earnings. But that's why I'm saying, like, even if it's on like the lower side, for some people, this would be considered the lower side anyway. Well, that's life changing, even if it's not immediately. Understand that if you do this and you just don't touch it, you don't have to worry about money ever again. Isn't that more important than having stuff? That's what I'm saying. And so that's why I'm piecing this all together, which is why I'm telling you right now, at this moment, if the analysts that I follow are even close to correct, this is the time, folks. So take a look at this from Credible Crypto. This is the S&P 500 index going back to, well, the chart goes back to like 96 or 97. But he's making a point about what's happening with the S&P 500. Credible Crypto shared the following with his 336,000 followers, and this was just on July 10th. He wrote, "For all the doom and gloom about traditional markets out there, the technicals look fine. This isn't a 2008 level bust yet, and it would be premature to assume it will be when we haven't even lost prior all-time highs yet. Structure is incredibly clean." And so, look, we'll see there's some weird stuff happening in the world. No, nothing's certain. But markets don't go down forever. The only way they go down and stay down forever, if you're talking about the S&P 500, is if the United States ceases to exist. And that's not happening. It's not now anyway. Not in my lifetime, I don't think. So no, there's going to be a bottom because the U.S. will continue to exist, right? It is going to, because look, if it's going to continue to exist, we're just going to be in depression literally for eternity. Like, it's nonsense. It's complete and utter nonsense. Which is why it's so easy for me to have confidence with this stuff. And then I see crypto just follows. Yeah, it's more volatile and it's fast moving, so it's more risky to invest in crypto. And you really do need to pay more attention with crypto, because I think most of the cryptocurrencies on the planet today, they're going to cease to exist. So it is a different world. But even so. So as far as the recent Bitcoin drop, you got to see what Credible Crypto had to say, as well as a couple others here. And so there's this article from the Daily Huddle titled, "Top Crypto Strategist Says Explosive Bitcoin Rally Imminent Despite Latest Bitcoin Pullback. Here's his target." A closely tracked crypto analyst says he expects Bitcoin to pull off an explosive rally after Bitcoin's latest correction concludes. Pseudonymous crypto strategist Credible Crypto tells his 336,500 Twitter followers he expected Bitcoin to retrace from $22,000 to around $19,000 before igniting a massive rally to his target above $30,000. And here's a quote from him. Was expecting a rejection from red and looking for a move down. End quote. And he's talking about the chart that's on your screen right here. And so that's what he was expecting, and that is what's currently happening anyway. Piece continues. Credible subscribes to the Elliott wave theory, a technical analysis approach attempting to predict future price action by following crowd psychology that tends to manifest in waves. With Bitcoin currently changing hands for $19,824, Bitcoin appears close to hitting Credible's downside target for his plotted wave to corrective move. In a recent video, the crypto analyst said a pullback to around $19,000 is healthy for Bitcoin as it enables Bitcoin to print a bullish high or low setup. And take a look at this quote from Credible Crypto. A retracement that deep is okay. A retracement that deep keeps the bullish count intact. And after retracing that deep and putting in a higher low, if you manage to come back above these highs and break $22,000, it's likely that this correction was a wave 2 and we're getting a stronger wave to the upside. And in that case, we're likely to rip past above the red region and confirm again, as from my last video, that our bottom is likely in. And we'll see that develop likely into a larger impulse structure. And at that point, reversal is well underway, end quote. And so based on Credible's chart, he expects Bitcoin to climb as high as $32,000 in the near term. And so look, hearing 32,000, it always sounds impossible to the typical retail speculator until it inevitably happens. I mean, I've been here since November 2017. So November will be my 5-year anniversary in crypto. Yay! And I've been through this crap before. Like, I'm telling people back in 2018, oh, Bitcoin, it's never going to hit $20,000 again. That was a bubble. People learned, realized, oh, it's never going to happen. You got people know, oh, Bitcoin's never going to hit almost $70,000 ever again. Oh, that's never going to happen. Oh, really? Are you sure about that? Because I don't think that makes any damn sense in the world. It looks like humans are behaving the same as they have the last roughly 5 years that I've been in crypto. Seriously, they're behaving about the same. The temperament's sure as hell the same. The irrationality in terms of getting in and out of positions, that sure as hell is the same. Where's the difference? It's like a very slow maturation process in crypto. And take a look at this too. There was this tweet from Credible Crypto, June 16th of 2020. So this is just 3 months after the biggest collapse that I've ever witnessed, basically. Certainly for XRP. XRP got down to 11 cents. Bitcoin got down to, I think, about $3,800 in March of 2020. So here's a tweet from June 16th, 2020. And he wrote, the move off the lows at, and he's talking about Bitcoin here, the move off the lows at $3,100 was the first impulse in our new bull run. Even in bull runs, we see impulses and then corrections. The bull run didn't complete at $14,000. That was just the first leg of it, and we have been correcting that leg ever since. So what he's talking about here is the low, it was in the middle of December 2018, got down to about $3,100, and then it started taking off. And when it did hit $14,000 and then went back down, he's saying that wasn't the end of things. There was still a future. And so he retweeted that literally just last night, and he wrote the following last night. When many believed our cycle was over because we dropped 80+% from $14,000 to $3,000, and depth of a correction does not invalidate a bullish cycle, a break of the lows of the prior impulse does. Our correction from $69,000 is not as deep, nor has it broken the lows of the prior impulse. And so that's basically an argument for why he's saying this is a mid-cycle correction, whereas other people, while they have a lot of overlap in what they think from what I've seen anyway, others call the bear market. Again, they can hash it out. I don't give a damn. I just want to know what they think in a general sense, and what I keep seeing is this recurring thing of, yeah, we're about at the bottom. You know, in fact, here's a perspective from chart analyst Income Sharks. He shared the following with his 324,000 followers. Here, I'll make this full screen for you because he got a chart. Bitcoin, nothing new to report. The summer of chop continues. The good news is we are forming a base for a move up towards November. So, and he's been articulating that for quite some time. He thinks that it's just going to go through the roof towards the end of this year. And so we'll see if he's right. And even if he's off on the timing and it takes longer, whatever, like the concept is what's important, which is why I have less interest in being a chart analyst myself. I'm glad they do it, but I'm more interested in understanding in a general sense behaviorally what makes sense. And on that, I'm pretty well versed. I understand it. I understood it before I knew what cryptocurrency was. I just found out then after learning about crypto, wow, it's the same humans with the same DNA, doing the same making the same stupid decisions, but on steroids. Which is actually a good thing because that means more volatility, and volatility is the reason for investing. If there were no volatility, why would I put my money in something if I want it to be worth more in the future? So yes, being in the most volatile asset class in the entire planet, I am so happy I have exposure to it. And then there was this, and I don't want to read this whole article, but there is this article from the Daily Huddle talking about Benjamin Cowan, who has a gigantic YouTube channel, 756,000 subscribers on YouTube. And he does all sorts of analysis and stuff. And I just wanted to share part of what he had to say because they transcribed it from one of his videos. I think it was... Here, I'll find it real quick here. It might have been this part. Because it's most... No, I apologize. I thought I had it ready here. Oh, yeah, here we go. No, this is it. Yeah, I was looking at the right spot. Sorry, folks. It's this right here. He said the following. I would speculate that Bitcoin is, you could argue, either in the latter part of the bear market or at the beginning part of the accumulation phase for the next market cycle. On a macro scale, buying Bitcoin below $20,000 is a fairly attractive price. But in the short term, we could eventually see another leg down into a cycle bottom in line with the 1 year running return on interest. Investment, there certainly is a possibility that happens. So that's the quote. So he's saying, yes, it could go lower, but in the big scheme of things, if this is a new cycle, once this cycle tops off, it's not going to matter. Whether you buy Bitcoin at 19,000 or 15,000 or God forbid, 13,000, oh my gosh. Well, when it blasts past $100,000 at some point in the future, assuming that happens, it's not going to matter that much, which is why dollar cost average makes the most sense investing, just in my humble opinion. It really is just a matter of time. And it's the same for XRP. Fine, we didn't get to see a new all-time high last year. We saw XRP blast up to $2. That was fun, admittedly. We didn't see a new all-time high. Maybe it's because of the SEC versus Ripple case that clearly has artificially lowered the global price of XRP. So maybe it's that. Maybe it's also the fact that historically XRP runs last when it comes to market cycles and when there's an alt season, and we didn't really see a full-blown alt season, so maybe it wouldn't have anyway, even if the price is suppressed. I don't know for sure. We'll never know for sure. Maybe it's a little bit of column A, a little bit of column B. But either way, it doesn't change anything in terms of long-term viability. This is in terms of investing, the almost 5 years I've been in this, it's the blink of an eye. You know, it's 5 years sounds far away anytime you say it's in 5 years, but then one day you wake up and it's 5 years later. It's going to pass. It feels like forever. And while you're living through it, it feels like forever, but it's not forever. Eventually the future comes. The next day does come. And so that's why for the people that are sufficiently prepared prior, they're going to get the rewards. And that's why I am so insistent upon my crypto investments, with XRP being my largest. XRP is my favorite cryptocurrency for so many reasons I've been articulating for years on end. It's my largest position. I do believe at some point in the future it will hit its all-time high. I do believe it's going to hit enterprise discovery. And I don't know where it'll top off next time it has another parabolic blast, but man, it's been so long. Historically, we've seen that since it does trade sideways longer than other cryptos, and they're all correlated, but it just trades sideways a little bit longer, generally speaking. When it goes, historically, it's really blasted off. I'm going to be here for it. I am seeing this thing through the whole market, clearly still moving in tandem. I'm just not seeing a problem. Even in a bear market, if that's what we're in, I don't see I don't care. It doesn't matter. That's why, again, it's crucial when it comes to investing to stay the course. So that's why my strategy after I purchase is to do nothing. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.